Good afternoon, welcome back. Today is Wednesday, 14th day of May, 2025. No fancy intro music today. The platform's just not cooperating. So, tomorrow's a new day, maybe it'll work. But thanks for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast, that's our live training room. In order to get in there, you got to be a member or on your 1 week free trial. If you have not taken your 1 week free trial, go here to mytradingiq.com. At the top of the page, there's a big purple button. Click it, fill out the form, hit submit. There's no credit card required. You will get 5 consecutive trading days on the trial. The weekend does not count against you. So if you were to sign up for the trial today, then your 5 consecutive days would carry into next week. Okay? All right. And again, no credit card required because we want you to focus on what's being taught. We don't want you fretting over whatever money you might have been charged by somebody else to be in their trial or whatever. We really want you to focus so that at the end of the 5 days you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, each day when the live training room ends, we take a 30-minute break and come back at 12 noon Eastern for this broadcast, the noon broadcast. Unlike the morning broadcast, this broadcast is open to the public. That's everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. I'm going to give you the best way first, because you only have to do it once. Go to mytradingiq.com, but this time scroll down the page to where it says Noon Broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is just click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from your desktop, maybe you're on vacation, but you still want to join live. And there'll be days when you're busy, you can't join live, but you want to get caught up later. Well, you can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network, but you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips, and it lets you know we've been around a minute. youtube.com/CFRN. This is our schedule for each afternoon broadcast. So we're going to dive right into our daily devotional topic we're on now. In fact, we're on day 12 of 15 after the cross. Our scripture today is Galatians 5:22 and 23. And I'm going to share with you from the Message translation. But what happens when we live God's way? He brings gifts into our lives. Much the same way that fruit appears in an orchard, things like affection for others, exuberance about life, serenity. We develop a willingness to stick with things, a sense of compassion in the heart, and a conviction that a basic holiness permeates things and people. We find ourselves involved in loyal commitments, not needing to force our way in life, able to marshal and direct our energies wisely. Again, that was Galatians 5, verses 22 and 23. So, after the cross, want to be a megaphone for the movement? We are to make the world look more like God's kingdom. But what does that look like? Well, in Galatians 5:22, Paul shared what God's Spirit is like, what He is like. He is loving, joyful, peaceful, patient, kind, good, faithful, gentle, and marked by self-control. Since that's what God's Spirit is like, since that's what God is like, that's what our lives must be like as well. We create a place where God's character is the order of the day, a place where His love, joy, peace, patience, kindness, and goodness are the order of the day. So, be a representative of His goodness everywhere you go. If a customer service person is on the phone with you, be a representative of His kindness. I mean, you could, harangue about how long you've been on hold, or is that going to change anything? No. If someone on your kid's baseball team is struggling with something, ask them if it's okay to ask your father for help. And go to him right then. You are a son or a daughter of God. Be like your father everywhere you go. Trust me, people will notice. Let's pray. Heavenly Father, we pray today that you would grow us in the fruit of your Spirit. We want that love, that joy, the peace, the patience, the kindness, the goodness, the faithfulness, the gentleness, and self-control. Let our lives reflect your character in everything we do. Help us to walk by the Spirit and bear fruit that brings you glory. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen, and happy Wednesday. Let me give you the numbers from around the world. Now, this is as odd a Sunday night as we had. Today is odd, just in a different way. After all the big, beautiful, positive things that happened yesterday, you would think the markets would be absolutely on fire today. But basically, with a couple of exceptions, everything's kind of flat and sideways, and follow through. Yeah, well, you got to look somewhere else for that, because I didn't find it. Anyway, let's start here in the U.S. with the cash markets, or the indices as they're called. The Dow's up a whopping 4 points. The Nasdaq is up 142. S&P 500 is up 13. But here's the kicker. The Russell 2000, our man in the street, is down 14. And I suspect that the other three indices just might follow the Russell today. I could be wrong. It's happened before. I remember one time back in the 80s. Just kidding. In the commodity basket, crude oil is down 4 cents, trading 63.27 last. Gold is down $60, trading 31.86 last. That's a drop of almost 2%. Silver down 66 cents, trading 32.44 last. That's a drop of 2%. In the Asian markets at the close, the Nikkei dropped 55 points. Shanghai rose 29. Now the Hang Seng gained 532 points. That's well over 2.25%. And in the European markets at the close, FTSE down 17, the DAX down 135, the CAC down 37. So we had a mixed day in Asia. It was a red day for the UK. And at the moment, it's a mixed radio Wednesday here in the US of A. Now, when it comes to trading futures, particularly the indexes, the indices, we like to see the 4 major ones all the same color. Doesn't matter if they're all red or all green, because as futures traders, we can be long, short, long again, all in the same hour if that's what the chart tells us to do. But when we have mixed markets, as we do right now, it's sort of like a tug of war. So we got the Dow slightly in the red. We got the Russell 2000 slightly in the red. NASDAQ and S&P in the green, but not by a lot. So that's just, this is the day the Lord has made. Let us rejoice and be glad in it. And whatever the market hands you on any given day, you just got to trade what's in front of you. Because none of us have any control over what the market does on any given day. Well, the Russia-Ukraine talks, I guess, are continuing. Ukrainian President, former comedian Zelensky, will be in Turkey. Some of you might not have known that. He was a stand-up comic before he became president. Will be in Turkey this week for peace talks with Russia. The talks, scheduled for tomorrow in Istanbul, will be the first direct negotiations between the two countries since shortly after the war broke out in early 2022. Russian President Vladimir Putin proposed the negotiations Sunday in response to European pressure for a 30-day ceasefire. Putin has punted on whether he will attend this week's negotiations. A delegation could reportedly be led by Foreign Minister Sergei Lavrov. I'm learning to speak foreign languages. Putin's offer was meant to forestall fresh sanctions on Russia's oil and financial sectors from the UK, Germany, Poland, and France. The countries now intend to levy the sanctions if talks fail to deliver a ceasefire. Now, I hate to be the wet towel, but how many times have we had these agreements of a ceasefire, right, at the negotiating table? But nobody seems to ever tell the soldiers that are out there in the trenches killing each other at the tune of about 5,000 lives a week. Over what? A little piece of land? Come on, man. The Menendez brothers. Some of you may be old enough to remember them. Eric and Lyle were resentenced yesterday to 50 years to life in prison, more than 3 decades after the brothers were convicted of murdering their parents, Jose and Kitty Menendez, back in 1989. The decision makes the brothers eligible for parole, with separate hearings scheduled for next month. The proceedings followed several days, including a recent request from prosecutors for more time to review a state parole board risk assessment. That report found the brothers pose a moderate risk if released, citing some prison violations, many of them years old. Prosecutors opposed resentencing, arguing the brothers haven't fully accepted responsibility. The defense pointed to evidence of rehabilitation and support from multiple family members. While the reduced sentence makes the brothers eligible for parole, any release still requires approval from the state parole board. If the board recommends release, the decision would then go to California Governor Gavin Newsom, who can approve or reject it. Well, it seems like everybody on that side of the aisle wants to let all the murderers and rapists and child abusers out of jail. What's happening in this world? I don't know. Tax and immigration. Details of House Republicans' tax and immigration bill began to emerge yesterday, lifting the hood on a sweeping package meant to enshrine several priorities of the Trump administration. The mega bill, involving 11 separate committees, would provide an estimated $5 trillion in tax cuts, while targeting around $1.5 trillion in savings. The bulk of cost savings, $625 billion, is estimated to come from changes to Medicaid, which provides health care assistance to more than 70 million people, largely low-income households. Separately, the bill raises limits on the state and local tax, or SALT deduction, but not as much as requested by a number of House Republicans. And this was a kind of a key sticking point. Other key components included funding to extend a U.S.-Mexico border wall, a $500 increase in the child tax credit, as much as a 21% tax on university endowments, and a $4 trillion debt ceiling increase. The package faces full floor votes in both the House and Senate and must overcome opposition from a number of GOP members. Rhinos, Republican in name only. I don't know how we let them hoodwink us, but they did. Nvidia stock jumped over 3% late this morning, extending its gain from yesterday when shares rose nearly 6%, and the AI chipmaker's market cap surpassed $3 trillion for the first time since February. Currently, Nvidia is up 3.25%. trading $134.15. So it's up like $4 on the day, $4.25. The gains come as U.S. chip makers, including Nvidia, announced billions of dollars worth of deals with Saudi Arabia during an investment forum attended by President Trump yesterday. If you didn't see that speech, it was an absolute masterpiece. Now, of course, the other side, they don't think it was so great, but I watched it, I listened to it, I dissected it myself. Okay, it was pretty awesome. I'm sure you can find it on YouTube or somewhere else if you missed it. Nvidia said it will supply several 100,000 of its AI chips to Saudi Arabia's AI venture Humain, which we talked about a few days ago. That's Humain, clever play on words. Beginning with the sale of one of its latest Grace Blackwell AI supercomputers using 18,000 of its advanced GB300 chips. Humain is a new AI venture owned by Saudi Arabia's $925 billion public investment fund and chaired by Crown Prince Mohammed bin Salman. It was launched just a day ahead of Trump's visit to the country. Bank of America analysts estimated the total value of the deal at $7 billion and raised its price target on NVIDIA stock to $160 from $150 in a note sent to investors early this morning. Now, he's bringing home the bacon, as he said he would. Promises made, promises kept. Now, this trade war with China is far from done, as long as Trump's still in the White House. That's the sobering reminder to stock market bulls from one Trump insider. Well, I don't think it will ever quite be over, but what will be over are these tariffs up over 100%. Billionaire businessman and longtime Trump confidant Wilbur Ross told this to Yahoo Finance on their opening bid podcast this morning. Ross served as the 39th U.S. Commerce Secretary from 2017 to 2021 and is the author of Risks and Returns, Creating Success in Business and Life. During his tenure, Ross helped implement Trump's first tariffs on China. The crucial spring home sales season in the U.S. barely got off the runway and is already sputtering. Well, Jerome, do you think lowering interest rates just might allow some people to actually afford a home? Well, I guess that's not his problem, is it? He probably already has a home. And it's probably paid for. And it's pretty nice. And I'm okay with that. I'm not jealous. But what about the middle class Americans? Oh, right, you're not concerned with those folks. April is normally when transactions kick into overdrive. Warmer weather drawing in buyers and sellers alike. But this year, the number of signed contracts was the lowest for the month since the COVID lockdown in 2020, according to seasonally adjusted data from Redfin Corp. Deals were down 3% from last April, already seen as a low mark. So, yeah, maybe we get a bounce. I don't know. Tesla stock is up today, almost 4.5%. On reports that the company's board is once again exploring how to compensate CEO Elon Musk. Per the Financial Times, Tesla's board has formed a special committee to explore a new pay package for Musk. With stock options potentially on the table, the Financial Times said the special committee is made up of Chair Robin Denholm and board member Kathleen Wilson Thompson. The committee will also explore alternative ways to compensate Musk for past work should Tesla fail to reinstate Musk's prior 2018 pay package, which is on appeal with the Delaware Supreme Court. Tesla shares have been on a tear recently, up nearly 3% today in early trading and jumping over 20% in the past 5 trading sessions. It's up $14.68 right now, trading $348.75 per share. Now, President Trump's signature economic package, that one big, beautiful bill, took a major step toward becoming law when the House Ways and Means Committee approved trillions in new tax cuts for corporations, households, and small businesses on a party-line vote. The bill, once it clears procedural steps, will head to the House floor for passage, but crucial issues, including an unresolved battle over the state and local tax deduction, threaten to delay or imperil Republicans' legislative agenda. The Ways and Means Chair, Jason Smith, said yesterday, as they kicked off the debate on the legislation, this one big, beautiful bill is the key to making America great again. And the folks on the other side of the aisle, they don't want to hear that. Now, this should get your attention. The CFTC Commissioner, Commodity and Futures Trading, you're probably familiar with them. Anyway, the Blockchain Association said today that current Commodity Futures Trading Commission Commissioner Summer Mersinger will join the trade group as CEO in June, as the cryptocurrency sector ramps up its push to overhaul digital asset policy. And that's a good thing, okay? Investors need, a hard set of rules that they can hang their hat on. Not this stuff we had in the past with no Claire Gary, the previous SEC chairman. He did everything in his power to destroy cryptocurrency, and here it is. It's kind of like Trump. No matter what they do to try to destroy him, somehow he seems to bounce back. And that's a good thing. Okay, moving on now to local news. I told you last night was flat. This is where you go, how flat was it? I'll show you. Now, oh, come on. Why do you want to do that? Does that fix it? Yep. Okay. The recap was last night at 8:30 p.m. Eastern. Normally, we get about a 6 a.m. New recap, 6 a.m. Eastern every morning. But things were so quiet overnight, not a single thing triggered or changed. Now, hopefully over the course of the day, something will, but anyway, Logic 247 is our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude, gold, silver. We're in week 354, and over the last 354 weeks, we've issued over 19,600 individual handcrafted alerts, and we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure, and a simple process we teach all of our passport holders. Now, when Valerie did the recap last night at 8:30 p.m. Eastern, we had issued, since the markets opened this past Sunday night, we've issued a total of 43 alerts this week so far. It's just Wednesday, still got a couple days. One never triggered, and we're still waiting on the outcome of 17. So the whole overnight session went by from 8:30 p.m. Eastern to 6 a.m. Eastern this morning when Valerie typically redoes the recap, and nothing changed. What? So that gave us 25 actionable alerts so far this week, of which 1 or 4% would have been stopped out, again based on market structure and a simple process we teach our passport holders. Now, every logic alert has an entry price, an initial target designed to help you get your goal for the day, quite often additional targets, and then a final trade to target. You can trade them. Yes, I can't stop you. And I don't really want to stop you, but I just want to make sure that you use the logic alerts for their true purpose, and that is to help you learn how to read the chart. If you want to be an attorney, you got to be able to read case law. If you want to be a doctor, you got to be able to read the medical journal. And if you want to be a trader, you got to learn to read a chart. Now, case law and medical journals, they're written in words and sentences and paragraphs, okay? But charts, oh, that's a whole different story. You need to be able to look at any chart of any market, and with the help of our humble set of indicators, instinctively know what the next high probability move is. And what we've proven over the last 354 weeks and over 19,600 alerts is that about 20% of the time or less, the market will do something other than the next high probability thing. Now, do we spend any time or treasure trying to figure out why the market didn't do what we thought it was going to do? No, zero. We just go look for the next opportunity. And you're going to have to develop that mindset as well if you're going to become a trader, okay? Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We got traders around the globe. Our day session is their night session, and vice versa. Now, 354 weeks, I know, is a very, very long time. We're at 4% on a Wednesday. That's okay. It's pretty sweet. Now, long before we had the Logic 247, we had our original alert service, the concierge trade alerts, and they're different. Number one, they don't come out around the clock. Number two, they're simply targets for the bigger picture. And I do my best to get them out 5 minutes ahead of the Globex Open each evening. In fact, I put a message in the Telegram discussion group letting you know that the CTAs are scheduled to be published at 5:55 p.m. Eastern, so that you can be aware and ready to take advantage of anything that presents itself at the open. So, last night, all of our members and all of our trial members had all of these targets 5 minutes ahead of the open: the ES, the Dow, the Russell, crude oil, the NQ, gold, and silver. So let's go look at the charts and see just what's up. We'll go to the S&P daily chart as we do the bellwether. Okay. Now we're in an uptrend for a long time. Then we began this downtrend. Leg, retrace, leg, retrace, leg, retrace. Notice how when price pulls back to the BBC, that's the green line, stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Now we're back to expecting higher prices. But this market, it's like trying to hold a beach ball because we're long overdue for a retracement back to the BBC. When the step line crossed here, that almost always leads to a retracement to the BBC. Okay? Like right here. See how the step line crossed from the left side to the right side right here? And then what happened? Boom. We retraced. Price always reverts to the mean. In our case, the mean is green and we call it the BBC. Pullback held, the pullback held, the pullback held. But eventually it will trade through. We are long overdue for a retracement. Okay? Now, this high here, it's basically this high here. Okay? If we crack through that, and we got to go look up here, around 59.44, and then above that, be like 60.48. So, I keep looking for my retracement, and it hasn't come yet. So, you know what? Now, let me point this out. You had a leg and a retracement, a leg and a retracement, a leg and a retracement. If the downtrend were going to continue, we would have put in a lower low, but we didn't. So, for all practical purposes, the downtrend stopped there. So now look at it this way. Leg, retracement, leg, retracement, leg, retracement, leg. Now, eventually, price is going to retrace to the BBC. And it could happen in one fell swoop over the course of a day, 2 days, I don't know. But just be ready. Trees don't grow to the sky, neither does the stock market. Okay, all alerts, both the CTAs and the Logic 247 alerts, are created on the 30-minute chart. There's nothing magic about 30 minutes, it's just the time frame I chose years ago. The vertical line here separates today, Wednesday, here's Tuesday, back here's Monday, and if we go back further, we can see that massive gap higher open that we got Sunday night. And then when the London market opened, see, there was good news over the weekend that created this, but U.S. stock traders couldn't touch it until Monday morning at 9:30 a.m. Eastern. But the European traders got the first crack at it. Boom. I think it's about an 80-point candle. And then we got a retracement to the BBC, the pullback held. And that is the highest weekly zone this week for the ES. By close of business, I still expect price to be at or below the highest zone. That's based on 15 years of history. If it doesn't, well, that's fine. Next week's a new week. We've published the zone since December 14th of 2009, almost 15 and a half years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. When price rallies up to a zone, we expect resistance till proven otherwise. And when price drops to a weekly zone, we expect support until proven otherwise. And when price encounters a zone, 70% of the time you're going to get this consolidation. 20% of the time you get rejection. 10% of the time, the slice. So, here's where we opened last night. Above the BBC, which is bullish, but with red and falling overhead, which is bearish. Now, as red and falling met the BBC, it turned to blue and climbing. So we got a little bit of a rally here. Right up until the London Open, when we dropped back to the BBC and the pullback held. And then we poked below it, but we never pulled away from it. And then we got another leg, some more consolidation, a retracement, and another leg that came close to the long target, but I didn't quite touch it. Yeah, we missed it by 3 points. The high of this candle was 59.25. Okay, but just in this one candle right here, it opened at 59.05, we'll call it, and it ran up to 59.20. That's 15 points in that one 30-minute candle. Now, the low of the session is right here. Okay, not a spot I would have picked, but we do have a pretty decent window of opportunity. Oh, let's get it right. Right here. Okay. Roughly 59.03 down to 58.95. Well, it's a nice day's work if it happens. So we'll see. We'll check back on it before the end of the session or the end of this broadcast. Look at the Dow. Look at how flat that thing is. We opened below the BBC, bearish, along with red and falling, bearish. And then we got this. We just consolidated sideways all night. We finally got some movement at 11 a.m. this morning. Price came down and hit the short target to the tick, as they say. And that low was based off these lows right here from Monday. That, my friend, is market structure. When the market finds support, it's going to go look for resistance. Remember the pullback to the BBC, whether you're pulling down from above or pulling up from below, the pullback holds more often than not. And it looks like we're going to hit that short target a second time. Now, if we take out this short target, you got a big window of opportunity here. Okay. Now, when you have a window that big, price often will not go all the way through it in one fell swoop. In fact, I want to bump that bottom up just a little bit. Because you see right here where red turned to blue, I just want to bump it up just a little bit. Okay. Something like that. But with a window that big, sometimes price will come about halfway down through the window and then retrace back to the top of the window or just above. And then on the second push, take you down to the bottom of the window. Okay. All right, that's the story on the Dow. flat as a flitter. I do not know what a flitter is, but I've heard that all my life. Country. I'm a country boy. Thank God I'm a country boy. Oh, wow, we're getting below the highest weekly trading zone on the Russell. Yay, team. All right, so we opened last night with a slightly higher gap open right into resistance at the BVC in red and falling. So we dropped a wee bit right to this low right here. Do you see that this low is this low? You see the market found support here. And so what happened here? The market found support, which sent it to resistance. Back to support, back to resistance, blah, blah, consolidation, and then we made the drop to the zone. We spiked it, and we hit the target, as they say to the tick. Now, what's that based on? Bullish cross right here. When the blue line gets above the green line, that's called a bullish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And it was. The same is true with a bearish cross in the opposite direction. So we consolidated at the zone, and I mean, we hit the short target once, twice, 3 times, 4 times. Now we're hitting it right now for the 5th time. Okay. If price breaks below that gives us 2 points, 2089 to 2087. Yeah, that's a 2-point window right there. It's enough to get your goal for the day. On the NQ, here's the open. We're above the VBC, bullish, but we got red and falling overhead, bearish. So we waddle sideways. Red and falling turns to blue and climbing. And we attempted to get there. Now I want you to notice that this high right here, okay? Look left. Follow the horizontal line on my cursor. You see this high here from yesterday? That's that high right there. Resistance sends us back to support at the BBC. The pullback held. And that support pushed us right up to the long target. Resistance, which sent us back to the BBC. Support, which sent us to resistance at the target. Back to support. Back to resistance. And now for the last hour and a half or so, we've just been consolidating here at this long target. But look at how flat this market is. My goodness. You'd think it was a holiday or something. Crude oil. Here's the open last night. Again, everyone had these targets 5 minutes ahead of the open. I realized with crude we didn't hit any of the targets, but everybody had them. So that can give you, if you're below the BBC, then like here, okay, this is a beautiful example. We got below the BBC, red and falling turned to blue and climbing. We got a little pop, and that little pop, okay, follow the horizontal line, boop, 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 boop. See that? Resistance. Sends us back to support. We break through the support. And that takes us down to this low here, which, if you follow the horizontal line on the cursor, is this low right here. Support sends the market looking for resistance. Our inability to take out that high. 1, 2, 3 attempts. Now remember, these are 30-minute candles. And we've attempted one more time to take it out, but we didn't quite get all the way there. We are above the BBC. We do have blue and climbing. So if crude decides to get its act together and do something, if it can take out these highs, that's real important. You only need 10 ticks to get your goal for the day. So 63.80 to 63.95, that'd be $150 per contract traded. That's if price gets up there. But the whole market, all of them, they're just so lackadaisical. I don't know if it's going to happen. So we'll see. Gold. Okay, we opened above the BBC and we had blue and climbing, both bullish. But then on this move up towards the long target, we were unable to take out this high from yesterday. See that? That's a sign of weakness. And look what happened. Blue and climbing turned to red and falling. We came down to the zone. And what did we do? We consolidated. That's what happens 70% of the time. This is what rejection looks like right here. Okay. Now, down we came, and yesterday, live on the this broadcast yesterday, if you missed it, you can, if you want, you can go look at it at youtube.com/CFRN. I drew in this window of opportunity yesterday at this time, like 24 hours ago. Now, it took a minute, but it filled beautifully. And then some. Okay? We overshot where I expected support, which was at the bottom of that window. So support, which came in just above this low right here. I mean, it only missed it by like a tick. That support sends us to resistance, and resistance will send the market looking for support, which you found at the target. We got one more bounce, but we did not take out that high. And notice where the market found resistance, at the zone. Okay? And then price was rejected from the zone. You had a green candle. You had 1, 2, 3 green candles. This was a green candle all the way up to the zone. But by the time the 30 minutes was up, the candle closed red and below the BBC. So once we broke through the short target, well, just not been a good day for gold. Now, if you go look left, you can make sense of this support that came in here. The step line has crossed red and falling. See, all the way down, you had price, the black step line, and red and falling. Okay, that's the perfect stack. But once that step line crosses from the left side to the right side of red and falling, now we anticipate a retracement back to the BBC. And you'll notice the low of this candle came right down and touched red and falling. When red and falling gets directly below price, then it becomes actual support. Even though red and falling is bearish, when it starts to curl like that and gets below price, think of it as support. So on the march back to the BBC, we got to take out this high right here, this one right here, this one right here. Okay, now this would be a counter trend trade. I haven't mentioned this in a while, but in the Logic 247 channel, those 19,600 plus alerts, every one of them is a trend trade, as defined by the 30-minute chart and the BBC. If price is above the BBC on the 30-minute chart of any market, I'm only going to put out long logic alerts. If price is below the 30-minute BBC, I'm only going to put out short alerts. So all those alerts in the logic channel, every one is a trend trade. Again, as defined by the 30-minute chart and the BBC. So in order for me to put out a long alert, price would need to get, we would need to close above the BBC and then have another candle open and start moving higher. Okay. But again, watch these resistance areas here, here. And also keep in mind you only need a $1 move to get your goal for the day. This candle right here opened at 32. Come on. It opened at 32.16 and dropped to 31.87. That's a whole lot of cheddar. It's over $3,000 per contract traded in that one candle. And everything was aligned. Okay? You could have even waited to take out this low right here. And you'd still have a lot of cheddar. From 32.07 down to 31.89. That would be 11, 7, 18 points, $1,800. I don't know, give or take. But this one big beautiful window that we drew yesterday at this time on this broadcast filled beautifully on the open last night. We only have one market left, silver. We'll talk about that in a bit. Michael's here, so he's going to give us a recap of what happened in the live training room this morning. Do some live trading on TradingView. Then I'll come back. We'll talk about silver, and I'll wrap things up with a good word for the day.
All right, here we go. Oof. So Bitcoin's down 757. I'm just looking at this down here. This is actually delayed a little bit. All right, here we go. Let me make sure that you guys can see what I think you can see.
Yeah,
yes,
it looks good. You got it.
All right. All right. All right, good afternoon, everyone. Today is Wednesday, the 14th day of May, 2025. Now, if you have not taken a free trial with us and you want to, go ahead to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial, okay? None. Click on that. It's going to bring you to this registration page. Just fill it out, all right? Name, email, phone number. That's the important stuff up there. Down here at the bottom, this is also very important. If you're going to take the trial, you need to give us your TradingView login ID, all right? If you don't give us a TradingView login ID, you don't get to get the indicators indicating on your charts. Click on this link right here to get TradingView if you don't have it. Click on that link right there. Now, I'm going to say this because I have a fella who has been having trouble finding his TradingView login ID. All right. For me, it's pretty simple. Okay, for me, the TradingView login ID is over here on this side. All right. But if I log out of this, let me save this. Let me save this. Okay, if I log out of this and I log back in with a different ID that doesn't have the same permissions as this ID, and I don't have the ID in here. All right, never mind. I'll log back in with this one. But if I log back in with somebody with a different permissions that's not premium, then it's probably not going to be over here on the left. It's probably going to be right up here. All right, the idea I was trying to log in to begin with an M, so I had a green M right here. And if you hover over that, like if I hover over this, it says CFRN, that's the ID. If you click on that one over there, hover over it, click on it, it's going to have whatever the ID is. That's what we need, all right? When you fill out this part right here, that's what we need, that ID. All right, all right. We had our worst day in a few months actually today. We're only up $450 a contract. We started off pretty strong, but then, well, the market's, well, I had missed some trades and I stopped out a few times. We ended up on the NQ minus 29, on the Russell minus 15. I don't think we were positive at all on either one of those today. No, neither one of them. On the gold, we're up 62. That was our shining light there. And we're up 4 on the ES. On the ES, the high of the day, we were up all the way up to 10 at one point. The gold, we ended at the high of the day. The NQ, we ended that at the high of the day. The ES, we ended that at the high of the day. So the only difference was 6 more ticks here on the ES was our highest point of the day. Today it took 6 minutes and 3 trades though to get the goal for the day. At that point we're up $100 a contract, and we took a total of 31 trades this morning. So on the month now we're at $8,882. Over 9 trading days we're averaging $9,986 per contract per morning session. With 10 contracts we're averaging $9,860 per morning session. But on the year now we're at $128,700 with 1 contract, averaging $1,588. We went below $1,600 today. We'll see if I can get that back over it pretty soon here. That's over 81 business days, averaging $1,588 per contract per morning session on the whole year. So far, if you're doing the 24/20, today we got it in relatively small amount of time, but it was just the exact amount to get the goal for the day. So it didn't really bump these numbers many. So far this year, if you're doing the 24/20 blueprint, you would have only had to trade 10.5 hours, and you would have averaged $3,618 per hour. Now, what that means to anybody who doesn't know is you achieve your goal every day, and you stop trading when you get to it. Like this morning, when I got to $100 right here, I would have quit trading. Right? Yesterday, when I got to $160 in that column, I would have quit trading. If you do that, you should be able to add 1 contract a month. That means 1 contract for every $2,000 that you gain per contract. You should be able to add 1 contract per month. So if you did that, so far this year, you would have only had to work that 10.5 hours, and you would be at 5 contracts right now, and you'd be up $37,872 if you did it just like me. Not bad if you can get it. Now the trades, we had a bunch of trades today. We had our fair share of stop outs and all that. Gold was our big winner today. We didn't have many stop outs on gold. We did have 1, but we didn't have many. Let's go back all the way to the beginning. Here it is. Our first trade on gold was right here. Now the first 2 trades that we took, one on gold and one on the NQ, both of them went enough to get the goal for the day, but I ended up getting very little on either one. I got 1 tick on that first trade. It did go 10 ticks into profit, then it came right back, and I had just bumped my stop and took me out with 1 tick. The next trade we got right here, we got 9 ticks. That's where we did actually get the goal for the day, but we took an NQ trade in between those 2. Did we take the NQ trade? No, we didn't take the NQ trade yet. Sorry. We didn't take the NQ trade yet. We might have taken a break-even NQ trade. I think that's what it was. We got a break-even NQ trade. Right there, we picked up 9 more ticks to get us to 10. That's what we got the goal for the day. We had a break-even in there. And then I was looking for the pullback into this area. We didn't quite get it. We took from 10, we went to 20. Then we went to, in here, we went to 22. Then we went to 37 on that move down right there. We had a break even. Then we had an aggressive trade here that we took. We went from 37 to 42. And then we had a break even, and then we had an aggressive stop out right there. I don't feel like I should have probably stopped out on that. I must have done something wrong on that one. I think I had a bad entry. But we went from 42 up to 44. Then we went from 44 down to 29 after that stop out. After the stop out, went from 29. Right here, we had an aggressive short to 47. Then a regular conservative short to 57. Then a break even, and there was 1 more trade in there where we went from 57 to 62. So we had a 5-tick trade in there somewhere. And that was what we did on the gold this morning. Gold was pretty active, and going through the spreadsheet, the gold has been our big winner this month, right? Gold has been the big winner this month. It was last month too, I believe, right? This was the gold last month. Actually, the ES was last month, but the gold was more than the NQ. That's what I was looking at earlier. Normally the NQ is the one that is the big winner, but the last couple of months, it hasn't been. But part of that is because I didn't trade it when it got too wild. I stopped trading the NQ, and I was trading the other markets instead. Really, if you go back and look at that, when in there, I didn't trade it for like a week and a half. I did trade it in here, and it still wasn't. I guess it was the big winner on that month. But when I didn't trade it in here, it wasn't. And so far this month, it's not. I don't know. It'll come around. I'm not too concerned with it. Anyway, next market was the Russell. So on the Russell, we didn't have many trades. These are all of them right here. This is the whole thing. We stopped out on the first trade, minus 15. We picked up 10 ticks on the second trade. I'm sorry, minus 25 on the first trade. We picked up 10 ticks on the second trade to get us to minus 15, and then we had a break even on this one. That kept us at minus 15. And that was it. At the end of the session, we had drawn in this right here that would have extended itself all the way up to here. And it had a trade right here that you could have done if you wanted to do. It wasn't the greatest spot for a trade because your stop would have been before the midpoint right there. Your stop would have been right about here. So it wasn't the greatest spot for a trade. What I would have suggested in the room is wait for a pullback on this bar so your stop's down below this level. So you could have gotten some profit on that. The next opportunity was right here. That was a pretty good spot for a trade considering this was your leg length. This is 50% of that leg length. That was a pretty good spot for a trade. The next one was 100% and then some pullback right here. So coming out of the oversold right here, that would have been a little tough to take, but it was a valid trade and it worked out okay. All right, that was the Russell, the whole day on the Russell. The ES, we had some, here we are on the ES. Our first trade on the ES was a break even. Then we followed it up with a 4-tick trade there. Then a 2-tick trade there to get us to 6. Then a 4-tick trade there to get us to 10. Then we had an aggressive stop out there, put us back down to 0. Then we had a break even. We had a +2 right there. And we had a +2 right there to get us up to 4. And that was it on the ES. It was kind of choppy in here today. There was a period in here today where I was looking at trading with this. And when you're trading with this, you don't need the YBR. You're just trading when the blue leads into the overbought without the black. Overbought or oversold. Doesn't matter what direction. If it leads without the black, you sell the open of the next bar, or you buy the open of the next bar. So right here, you'd sell the open of that bar. Right here, you'd sell the open of that bar. Right here, you'd buy the open of that bar. That wouldn't have worked out. You'd sell the open of that bar, would have been a break even. You'd buy the open of that bar, would have worked out. You'd buy the open of that bar, wouldn't have worked out. You'd sell the open of that bar, the open of this bar right here, that wouldn't have worked out. When the leg lengths start like that, then that's no longer a good way to trade. But when it was really choppy, it was a good way. Anyway, I did some of that on the NQ today too. There was one point in here where I traded conservative and then I traded aggressive right after it. I took the conservative trade right here on the short, and then I did the aggressive trade right after it, right here. If you put this on, you'll see. I had the conservative trade coming out of the overbought right down to the aggressive trade right here. And so I picked up 8 ticks on the first one and 16 on the second one, I think, or something like that. It was the other way around. It was 16 and 8. Anyway, our first trade on the NQ was right here. We got a break even on that. Then we stopped out on this one. We never came back from that. We were minus 60 ticks on that. Had a break even there. Then we picked up 3 ticks, got us to minus 57. Then 4 ticks, got us to minus 54. Then we had that 16 and 8. So it brought us to 37 and then minus 29. So minus 37 and minus 29. And that is where we ended it with the NQ. All right, so it was not easy trading today with any of this. So that is how our day went. So we'll get into row trade some more now, but before I do that, I want to go back here and say, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Just click on that purple button. When you do, you will be sent to this registration page. Just fill it out. All right, when you fill it out, down here at the bottom, make sure you give us the TradingView login ID. All right, if you don't give us the TradingView login ID, we don't know that you took the trial. So you got to make sure you give us that TradingView login ID. Okay. All right, that is that. I'll get back into the trading here. I'm being aggressive right now. The leg lengths are long enough here to not be here too. Over here on the ES, you could be aggressive if you wanted to be. Right now, I'm going to turn the context back on to see where the YBR is. We're below the YBR, so you could have shorted right here on the down close, conservatively shorted on the down close right here. Let me get rid of these things because they were from the morning session. Okay. They were all from the morning session. And one of the questions that I got this morning that I think I'll say again right now. Let's take let's take this right over here on the NQ, for instance, right? You see where the YBR flipped when it came down here, it flipped the YBR. So when you're drawing the retracement lines, now let me hit the record button on this because Daryl wanted me to do this, and I did it twice yesterday, but I don't think I named them right. So let me just record right here. When drawing the retracement lines, if you're above the YBR, you draw from the bottom up. If you're below the YBR, you draw from the top down. But closer to the YBR, away from it, right? You're drawing from the YBR away. Now, the issue comes right here where the YBR gets hit and it flips, right? At that point where it flips, you can't really draw from here down to anywhere because there's nothing over here on the right-hand side once it's flipped. So you have to draw from here, all right? So once it flipped it, you draw from here. Oops, sorry. You draw from here down to there. That would be your tracement line. You'd be looking for it to pull back to the midpoint of that. Okay, that's where you'd be trying to. The optimal place to have your trade would be right there. The optimal place to not have your stop would be somewhere before right there, right? The optimal place to have your stop would be on the other side of that. So if you get a chance to enter in here where your stop's on the other side of that, that's good. If you get a chance to enter and your stop's going to be right here, wait for a pullback. So your stop's going to be on the other side of that. Okay. Again, if you're above the YBR, you're going to be drawing away from the YBR like this. Okay. To get your retracement, you're going to be drawing away from the YBR. So you'd be looking for the retracement down here to the midpoint. If you're below the YBR, let's go over here. If you're below the YBR, you're going to be drawing away from the YBR like this, right? So you'd be looking for your retracement to come back up to the midpoint like that. All right. When it flips the YBR, like it did right here, when it flips the YBR like this, you see, when you're at this point right here, when you're at that point right there, you can't draw away from the YBR because you're not anywhere near the YBR. So you have to draw from down here to get your retracement level. Okay, the last time that it came out of the oversold is where you started. So it'd be the last time it came out of the oversold to be right here. That's where you choose when it breaks the YBR. Okay, because that's all the information you have when it's broken the YBR. And then you look for it to pull back to the midpoint in there. Look for your entry where you can have your stop. Your entry can be at the midpoint or your stop can be below the midpoint. Okay, so in that case, it would have been right here. You could have taken the pullback on this conservative trade coming out of the oversold. You could have taken it right there and your stop would have been just about right there, just below it. Or you could have taken it on a little bit of a pullback right here and your stop would have been well below the midpoint. Okay, that is how you do the stop. You do the retracement lines. There. Yeah, I just made that recording too. Now, let me go. I'm going to, before I mess that one up, I'm going to go and name it and stick it out in the appropriate folder. So that makes sense to all you guys? All right. That is going to be out here under videos and 514, 1311. Rename. Okay, so the place I'm going to stick that, guys, is in Telegram. We have a channel where I'm putting videos that I make that I make on the fly like that are good for everyone to have in their toolbox. And so it's right here, right? This is the video that I just made, and I'll call it here. YBR flip, sorry, not fib. And I'll spell it better. There we go. Okay. This is called TIQ videos. It's open to the public. All right. I'll give everybody a link to it. Manage group, invite links, copy link, done, cancel. All right, I'll give you all a link to that so you can go and have access to that video and join that group if you want. Somebody's got to type something in here. Anything, anybody, anything. I can put it in the chat box over there too, so it's a clickable link. But for me to enter it in here, somebody's got to actually type something. So Jim, Jim C or Joseph or Jason or any one of you guys. Hey, all you J guys are right there in the middle. Type anything into the question box and I can post that link out there for you. If you don't, I can't. All right. In the meantime, there is a trade. I'm trying to move this down. There is a trade. Wow, I can't even get to my DOMs. By the time I get to them, the trade's going to be gone. I'm not even looking at the charts right now. Yep, the trade's gone. There was a trade right here on the ES. Okay, that's what I was looking at. All right. So it is now 1:16. We have 14 minutes left, and it appears nobody is listening because nobody typed anything into the question box. But I'll go through it anyway. Hey, Travis. Then I'll type the link in right here. There you go. That is the link. Usually when I throw that out there, about anybody listening to type something into the box, somebody does rather quickly, and nobody did today. But I'm glad to see that there are people listening. It's more than just you two, Travis and Masood. But that link that I just gave you will get you to that channel in Telegram, this one in Telegram. All right, Travis, I don't think you're in this one yet. All right, it's got some videos that I've created about the stuff that we're doing right now in the room. You can go into 3 and see some of the trades that I've actually taken in here. Sierra Dom stuff, basic Sierra Dom stuff. This is some stuff that a lot of people ask me questions about. You can go and watch that video and I'll probably cover it all. Some other stuff in here about create the move to break even button on the DOM, how to create that. Because that is by default, this move to break even thing is not right here. Okay, you have to just follow those instructions to get to it. Okay. Welcome, Travis. All right, so right here on this last move right here, right? You didn't go all the way down into the oversold. When you came out of the overbought, you didn't make it into the oversold. The rule is this. To have a follow-up trade, every time you come out of the overbought, it's got to go all the way to the oversold. All right, like right here, it went all the way down to the oversold. Hasn't gone back into the overbought yet. That means there's momentum on the downside. Okay, to have a follow-up trade, it's got to get all the way back up into the overbought. Now, let me just summarize for anyone who hasn't been watching, like perhaps you, Travis. There's different types of trades, right? And if you go here out to mytradingiq.com, you click on trade rules right here. 3 types of trades from the morning session. There's a conservative trade, the aggressive conservative trend trade, the aggressive trend trade, and the most aggressive trade. All right. This right here would be a conservative trade where it comes out of the overbought right there. You take the down close where it comes out of the overbought, you're below the YBR. You just take that trade, right? You sell the open of the next bar when it comes out of the overbought like that. So you could be selling right here, for instance. Okay. Here. The aggressive trade, and there's a time and a place for the aggressive trade. The aggressive trade would be right here, right now on the NQ, where you'd sell when it goes into the overbought. Or you sell when it goes into the overbought, as opposed to when it comes out of the overbought. Now I got to manage this trade and the one over there just on here. I just did the aggressive trade on the NQ. And I got to put this one at break even. The stop is at break even on the NQ. I'm going to lock in some profit here on this one. Where am I in at? A minute 20. No, a minute better than 20. I'm in at 34.75. I have a 75 tick target on this, but I'm going to go all the way down to 24.75. That's 40 ticks right there. And over here on the ES, we're going to lock in. That's 8 right there. It's 44, 48, 52, and 12 there. And we're out with 12 on the ES and 56 on the NQ. All right, so let's explain those trades. Let's go through those trades, okay? The reason I took this one here, I took the conservative trade when it came out of the overbought right there, right? You want to take a conservative trade when, well, let's look at this. You were looking at this right here, okay? When it goes into the overbought, if it's at the 50% retracement level, that's when you want to be aggressive, all right? If it goes into the overbought and it's not the 50% retracement level, then you want to take it when it comes off of the 50% out of the overbought, all right? So I took it right in here. I ended up entering in here after I was talking to you about it, and then I entered on the pullback right in here. So I got in on the pullback right here on that trade, and we picked up, what did I say, 12 ticks on that? And the NQ, now the NQ, the way that the fibs, the retracement should have been drawn is from here where it came out of the oversold, and the overbought, and it went back into the overbought. So I actually was a little bit too aggressive on that, because it should be from here to here, right? I took the aggressive trade on that because I was looking at this leg length right here. And if you look at that leg length, that's a 50% retracement right there of that leg length. Maybe it was this leg length that I was looking at. I don't know, but it looked like a 50% retracement to me. So I took the aggressive trade there where it went into the overbought, and I sold when it went into the overbought right there. And I just picked up those 56 ticks on that. So let me try to explain that. Let me draw it and explain it with a drawing. All right. I just did it right there, kind of did it. I didn't do it exactly right on one of those. But when your oscillator, let's use this right down here, you have your oscillator, right? You're overbought, you're oversold. And up here you have your price. So when price is going down like this, all right, and your oscillator, your oscillator is going down as well, okay? So your oscillator goes down and it gets down here like this, and it gets into the oversold. And then if you have a big leg length down right here, you know, a long leg length down, then it's going to flatten out down here in the oversold. It takes 2 leg lengths for this to get from the oversold to the overbought, right? So if this move down right here is about 4 leg lengths down, then 2 leg lengths back up is going to put you right at the midpoint of that, right? It's going to put you at the point of that, where you want to have a trade entry, okay? Where you want to have a trade entry. So if this starts to come out of the oversold, because this has gone up 1 bar length, right? Now this has gone up 1 bar length, so this has to happen first. And then this comes out of the oversold. It might go halfway up, it might just go part way up, something like that. But the next up close is going to make this into the overbought. So if this is the way it comes together, if it comes together like this, and you can see this happening, you know, I'm explaining you probably in more detail than you need, but you can see this actually happening in real time. When it's pulling back like this, if you have 1 bar length from here to there and you have 1 bar length from here to here, you know the entry, you know, this is going to be your 50% marker right here. You can be aggressive knowing that you got into the overbought at the same time you got to the 50% level, which should act as resistance. So at that point right there, on the up close of this bar right here, right, gets you up there to the midpoint, and this at the same time gets you into the overbought, you sell the open of this bar, okay? And you would down here, when that bar from there will probably go down, and then this will go down, and then this will go down again, and this will go down again, and by then you've already gotten your goal probably. But what it should do is extend this leg length right here 1 more time, okay? So what's going to happen here is once it gets through this, if it does extend beyond this level, it's going to flatten out down here at the bottom, okay? And then you'll have the whole thing happen all over again to get back up to the midpoint, up here, then up here, and then back up to the midpoint, and you sell it again. Now, if it works out that the leg length going down is really long, like that, and this comes down and it's a couple of moves down here, and then it flattens out down here in the overbought, and your midpoint now is way up here, right? So it's still 2 bar lengths to go from overbought to from oversold to overbought. So as this is going up into the overbought, right? The overbought level is here now. As it's going up into the overbought, and price is going to take more than 2 bar lengths to get to the midpoint. So at that point, you don't want to be aggressive, right? At that point, when it gets up to the midpoint, if it gets up to the midpoint, when it gets up to the midpoint, if it gets up to the midpoint, you want to wait until it comes out of the overbought, and that's when you enter on the down close when it comes out of the overbought, right? That's all there is to know about how to use different types of trade setups. If it's really choppy like this stuff right here, like this stuff where it's just 1 bar length, 1 or 2 bar lengths like that, that's when you can throw the divergence in here. And with the divergence, you don't need the context, you don't care about the trend. All right. So in here, anytime it goes into the overbought, you sell the open of the next bar. Every time it goes into the oversold, you buy the open of the next bar. The blue, the blue's got to go by itself. It can't go with the black. If the blue goes by itself, you buy the open of the next bar. Blue goes by itself, you sell the open of the next bar. By itself, you sell the open of the next bar. By itself, you buy the open of the next bar. All right. That works great in chop like this, but it doesn't work when you have longer leg lengths. It doesn't work at all. So it's easy to see when you have longer leg lengths. It's easy to see. Now, that is the most aggressive. When you're doing it that way using this, that's the most aggressive. All right. The next level of aggression, you use the YBR to give you trend, and that's where you're buying as soon as it goes into the oversold. If you're above the YBR, you're buying as soon as it goes into the oversold. And the least aggressive or the most conservative is waiting until it comes out of the oversold in a direction of the trend. If you're above the YBR, you're waiting until it comes out of the oversold and buying in the direction of the YBR. Okay, that's the least aggressive. And I just explained to you when you swap between those two. All right, when the price action warrants swapping between those two is when you do it. All right. So those 2 trades that we just took, I didn't actually take them exactly right, because if we were looking at that one over here on the NQ, wherever that one was on the NQ, this one right in here, this retracement right here, when I was looking at it right here, that was a good retracement level, but that isn't a good retracement drawing right there. I should have been going from back here, right back here where it came out of the overbought right there to where it went back into the overbought. The high and the low between that is what you look for, right? The high and the low between that. So this is the midpoint right up here. But I took a more recent midpoint and worked with that instead. This one right here is a good spot though. Right here, if you just do everything that I just said, a down close on this bar right here, if it pulls it out of the overbought, it would be a good conservative trade. All right, it's got a high here 22, so you'd be selling 10 on that right now. All right, 12 points below the high of the bar. That's why you might have noticed it's a 47 range as opposed to a 50. It's 12 points below the high of the bar, so you'd be selling 10 right now. Okay, like that. I have a sell stop limit at 10. And what should happen when that gives a down close, this will pop out of the overbought and it should go down here to the prior swing low, at least to the prior swing low, right? That's what should happen with this. Now, if I use, let me put this here on top. If I use this, and it's about the same leg length as that last one that I just drew, right? Oops. Yeah, there. Okay, so here's the midpoint. That's why I was looking for the down close to be right there at the midpoint of that. But it's going to give us that down close. It's got that high right there. The high is 22.5, right? So it should be 10.5. 12 points from the top. And just to make sure, I'll go right here, and the high of that bar is actually 21.5. So 21.5 minus 12 should be 9.5. Okay. I thought it was 22.5, but if you look over here, you can see it's actually, the high is 21.50. And if it ends up going up higher, then It's going to give us an up close. It's not going to be as attractive as of a trade for me, unless the next bar starts at the top and closes at the bottom. Right, this is like, it's 1:30 and I got a bunch of stuff I got to do today, so I'm going to wrap this up in a minute. I want to see this trade happen. If it's going to happen, I want to see it happen. It should happen here in just a minute or two. While we wait, okay, no, it closed up. Okay, so we won't do this. I'm going to take this off, but you see what I'm looking for, right? A down close here that would put us right there. Now it just went up just a hair higher. So the high is now at 23. So now you'd be selling 11. Okay, but it looks like it's going to keep going up, which makes it a less attractive trade to me. I'd want to 100% retracement. So your stop is going to be on the other side of the 100% retracement level. All right, anyway, if you have not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Click on that. It's going to bring you to the registration page. Just fill this out. All right, once you fill that out, you have everything you need to get into the room in the morning. All right, and get your indicators indicating. So make sure you fill it out properly and completely. And that is it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay. All right. Well, you see where this trade is right now. It's it's right in the middle of everything. So it's not really an attractive trade to me anymore. I'd rather have this bar close up and the next bar have a wick that goes up, and maybe even have the next bar close up at 100%. See, it's going to give the down close right there. Now that's not a great trade because your stop is right here now, right? Right here, it's gone through the 50%. This could act as support now and push it up to 100% retracement. And your stop is right in between. It's right in the middle of all this right here. So your stop's not in an ideal place right now to take a trade right here. You know, anywhere down here where your stop would be above the 50% mark would be good. I'm right here at the 50% mark. An entry there would have been good. But right here in the middle where your stop is in between here and here, not good. I did a thing on that a few weeks ago, or maybe last week or something like that, about not really stop running because they don't really run stops, but you just got to be smart about where you position your stops. If you look at the DOM, you can see in here where the numbers are grouped, right? And a lot of times those numbers are grouped at the swing highs and lows, and there's a reason it's a swing high and low, right? It's because it's buyers and sellers at those swing highs and lows. So you don't want your stop to be right in the middle of all those buyers or sellers, right? Because the market's going to be attracted to that level. You don't want your stop to be right there, right? Makes sense? Okay.
I'm ready if you are.
All right. Go ahead. You can have it now.
Okie doke. Recap of the morning session.
Today it took 6 minutes and 3 trades to get you $1,000 per contract.
Good job.
Thank you very much.
Okay, guys, we'll pick up where we left off. We had made it through all the markets except silver. And this was the opening candle last night. And remember, every member, every trial member had these targets 5 minutes before the market opened. So we opened and ran right into resistance at the weekly trading zone. When price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance till proven otherwise. And so we came down through this little window that I had drawn yesterday at this time during the broadcast. Sometime during yesterday's broadcast, if you missed it, you can go watch it on youtube.com/CFRN. We filled it once, we filled it twice. And then we traded down through the target. And the target was based right here where red turned to blue. And we came pretty much down to the target. The target, or the zone, is 3271/72. And it looks like the low 73. Yeah, 73. So we missed it by a penny. Okay. So when the market finds support, like up here, we found resistance, so we go to support. Support sends us to resistance at the zone. Resistance sends us looking for support. Remember, the pullback to the BBC holds more often than it doesn't. So that bounced us back up to that same resistance. Now, these are the weekly trading zones that were published Monday morning at 6:15 a.m. Eastern. And they're still doing their job. Then blue and climbing turned to red and falling, and we ripped through that short target, and we sliced the zone. Okay, on the 30-minute chart, when you have a 30-minute candle that slices through a zone like it's not even there, when it runs out of steam, it will typically retrace to the zone it sliced through and then continue in the direction of the slice. Notice how red and falling curled up under price, making it potential support. And it was. The step line has crossed from the left side of red and falling to the right side. So what do we expect? A retracement to the BBC. So we covered all the markets already. That window I drew at the beginning of the broadcast. Remember, we were pegging it off this wick down here. As you can see, we filled it during the 1 o'clock candle. Okay, I think that was it. What was it? A 4-point? It was 59.03 down to 58.95. So it was actually, that was an 8-point window of opportunity. And I drew it for you at the very beginning of the broadcast, and I explained to you exactly why that was a window of opportunity. Okay. Okay. We drew this huge window on the Dow. We came right to the top of the window, but we haven't entered it yet. But we just got a bearish cross up here. That means red and falling got below the BBC. So I suspect we could see this window fill before the close today. Certainly possible. On the Russell, we did not fill the window. We came down a little bit, about halfway. And again, what we've learned over 354 weeks and over 19,600 individual alerts, 20% of the time or less, the market will do something other than the next high probability thing. And here is a prime example. Okay, should have come right down to this low, but it didn't. So am I going to worry or fret over it? I'm too busy for that. Market's going to do what the market's going to do. The NQ, we're still butting our head up against the long target. Not much has changed there. Crude oil, I did draw a long window up here, and crude pretty much hasn't moved. So nothing to see there. Now gold, I drew this window yesterday on the live broadcast, and we filled it last night. Okay. And we just looked at silver, so we don't need to look at that again. One last look at the daily chart. Ooh, we got a doji. We had a little bitty green candle. This is an inside day. Today's high has not taken out yesterday's high, nor has it taken out yesterday's low. But that little doji could be potentially the beginning of the pullback to the BBC. Price always reverts to the mean, and in our case the mean is green. It's called the BBC. Okay. Now, if you want to become a passport holder, go to mytradingiq.com, watch the videos, read the content, and when you're ready, send an email to support@cfrn.net. Let us know that you want to become a member. We'll send you an email that explains everything it means to become a passport holder, and we'll include a link that you can click to instantly seal the deal. You're going to get 2 hours of live training every trading day. That's interactive training. Live trades, live markets, real money, while you follow along and ask every question that pops into your head and trade in your demo account. Okay? Because you're not going to learn the strategy just watching Michael trade. Okay? You got to start clicking buttons. Okay? You could spend a year watching videos of Mark Spitz swimming, and in your head, man, you know the butterfly stroke, the backstroke, whatever other kind of stroke there is, but you still don't know how to swim. So, according to the 24/20 blueprint, you should put together 10 consecutive days in sim where you reach your goal in 10 trades or less before you even consider trading real money. That's designed to help you not blow up another account. So 2 hours of live training every trading day. On top of that, you have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Future stocks, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again, as I've just shown you today. That's why it is so important that you use those logic alerts to help you learn how to read the chart. You want to be able to look at any chart of any market and instantly spot where potential resistance is, where potential support is, and in doing so, you unveil the windows of opportunity that exist in between those two important points. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're posted each evening. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. And you're able to attend the members only workshop every Thursday night at 8 p.m. Eastern. That would be tomorrow night. And you get the golden key that opens all the private channels in Telegram. One of those channels happens to be the weekly workshop channel. Every Thursday night when we end the workshop, we upload a video of it to that channel. So when you become a passport holder, you'll have access to all the private channels, and in the weekly trading zone, in the members only workshop channel, there's hundreds of weekly workshops. Do you need to watch them all? No. But you can scroll through and read the captions beneath the different videos, and you might find something that you'd like to learn more about, so watch that video. But no, you don't need to watch them all. Also, when you're on the trial, you're able to talk with our traders who have learned our strategy and are enjoying being profitable for once in their trading lifetime. Now, very few places, if you take their trial, they're not going to let you mix and mingle with their traders, because you might hear some horror stories. Well, we don't have any horror stories because we're just honest about everything. There's no sleight of hand, no parlor tricks, no tomfoolery. What you get is everything a trader needs, all under one roof at one low price. Let the journey begin. Okay, we're going to wrap this up with our good word for the day. Yesterday we talked about putting God between yourself and the foe. Today, forgive them and delete the offense. Luke 23:34. Father, forgive them, for they know not what they do. Some societies in history punished those who committed adultery by making them wear a big scarlet letter. A. It was A. The letter A. Red. If you don't know what scarlet is. Publicly identifying their behavior. And if you were caught stealing, they made you drag a ball and chain around. Now maybe you're thinking, well, they deserved it. Really? Jesus said, if you simply lust after someone, you have committed adultery in your heart. Matthew 5:28. Then he went on to say, the standard of judgment you impose on others is the same standard you will be judged by. Matthew 7:1. So be real careful when you climb into that judgment seat. I know personally that my backside is far too narrow to sit in the judgment seat. It's a lesson hard learned. God is not soft on sin. Don't get me wrong. But I want you to notice two things. Number one, he won't just overlook your sin, because the Lord disciplines the one he loves. Hebrews 12:6. Would you let your child go out and play in traffic? Of course not, because you love them, right? Nothing can separate us from the love of God. Romans 8:38. The guy sitting on death row right now for a heinous murder, God loves that person just as much as he loves you. Now, that's a tough pill to swallow for religious people, but it's the truth. It's God's word. We don't use scarlet letters or balls and chains today, but we do use computers. So when someone hurts you, God says we must forgive them and delete it. You're not setting them free, you're setting yourself free. Otherwise, it's going to influence the way we think, act, and talk. Plus, it will keep us tied to old, painful memories. But forgiving them is hard, you say. That's why Jesus said to pray for those who mistreat you in Matthew 5:44. Forgiving someone begins with praying for them. What? You don't know what that guy did to me. Doesn't matter. Pray for him. That's what Jesus said. He said pray for him. You say, but I need to understand why they did it. Wise people do foolish stuff. Good people do bad stuff. And misguided people, they don't even know what they're doing. Jesus prayed for those who crucified him. He said, Father, forgive them, for they know not what they do, as they were driving those spikes into his hands. Someday, you may understand what motivated your offender. But even if you don't, forgive them and delete the offense from your mind. I want you to think about this. How many people are you letting live rent-free in your head because of some offense, some slight, something that happened a week ago, a month ago, a decade ago? I've seen families split apart. I've seen brothers and sisters not talk to each other for 10 years, 20 years. That's not how God wants us to live. Forgive, set yourself free, and move on. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Really? There we go. Gotta play the disclaimer.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.